If you look closely at where most traders quit, it's not after a massive blow-up. It's not after losing everything. It's much quieter than that. It's a normal day, a normal chart, a normal loss, and a thought that sounds harmless. Maybe this just isn't for me. That thought ends more trading careers than margin calls ever will. Because the place where 90% of traders quit isn't dramatic. It's subtle. And by the time you notice it, the damage is already done. Right now, this matters more than ever. Markets are faster, louder, more crowded. Everyone has access to the same charts, the same indicators, the same YouTube videos promising clarity. And yet, the failure rate hasn't improved. If anything, it's worse. Not because people are lazy, not because they're stupid, but because they misunderstand what phase they're actually in. Let me tell you a story that almost every trader recognizes, even if they don't like admitting it. You start trading with excitement. The charts feel alive. Every candle looks like a message meant just for you. At first, the losses don't hurt. They feel educational. You call them tuition. Then something strange happens. Your strategy starts to make sense. You're not guessing anymore. Your entries are cleaner. Your losses are smaller. On paper, you're improving, but emotionally, this is where things start to break. Because now the wins don't come fast enough, and the losses feel personal. This is the phase most traders don't see coming. Early on, hope protects you. Later, clarity removes that protection. Now you know enough to see your mistakes clearly, but not enough to avoid them consistently. That gap is where 90% of traders quit. Not because the system doesn't work, but because the math stops lying to you. Here's the uncomfortable part. Most profitable trading systems don't win often. A 40% win rate is common, sometimes lower. That means more losing trades than winning ones. Early on, people ignore this. Later, they feel it. 5 losses in a row doesn't sound scary until it happens 3 times in a month. And this is where the psychology flips. You stop asking, is my strategy valid? And start asking, what's wrong with me? The market hasn't changed, your edge hasn't vanished, but your expectations have. Social media doesn't help. You see screenshots of perfect entries, green days, confident voices saying simple and easy. What you don't see are the flat months, the boredom, the days where nothing happens and discipline feels heavier than risk. So you do what most people do. You tweak, you adjust, you optimize something that wasn't broken. A stop moved slightly wider, an entry taken a little earlier, a rule bent just this once. Not because you're reckless, but because you're uncomfortable with waiting. This is the hidden mechanism that ends most traders. It's not risk, it's impatience disguised as improvement. The irony is brutal. The closer you get to consistency, the less exciting trading becomes. Fewer trades, less adrenaline, more sitting on your hands. And for a lot of people, that feels like failure. They wanted freedom, they got boredom. They wanted clarity, they got repetition. So they quit, quietly. Usually right before the curve would have flattened out. Let's zoom out for a second. Every performance-based profession has this phase. Athletes, musicians, surgeons. There's a moment where progress slows, not because you're stuck, but because you're transitioning from learning to execution. In trading, this phase is especially cruel because feedback is delayed and randomness never disappears. You can do everything right and still lose, several times in a row. That's not a flaw in the system. That is the system. The traders who survive this phase don't feel better. They don't suddenly become confident. They simply stop reacting. They accept that consistency feels boring in real time, that improvement doesn't feel like progress day to day, that results arrive late. Most people can't tolerate that delay, so they confuse emotional discomfort with strategic failure, and they leave. Here's the quiet truth nobody markets. If trading feels hard in this phase, that doesn't mean you're failing. It means the illusion phase is over. The hype phase is done. The fantasy of constant confirmation is gone. What's left is execution, and execution is not entertaining. That's why 90% quit here, not at the bottom, not at the top, but in the middle, where the numbers finally start making sense and the emotions stop cooperating. So here's the real question. If the hardest part of trading isn't learning, and it isn't losing, but continuing when nothing feels rewarding, what does that say about who actually survives this game? And more importantly, where are you really on that curve right now?